Welcome to Finance News Frontiers Explainer. Today, we're breaking down Pershing Square's massive $5 billion IPO. Let's get right into it. Bill Ackman is an investing legend. Since 2004, his activist strategies generated a staggering 2,600% return. But how does a high-octane activist build the next Berkshire Hathaway? Well, the secret sauce is permanent capital. Let's look at this two-decade evolution. They've totally morphed from a traditional hedge fund into a massive public institution. See, permanent capital removes redemption risks. It lets managers safely hold high-conviction bets through the absolute craziest market cycles. A $25 billion goal failed in 2024, but Ackman pivoted fast, nailing a $5 billion raise in 2026. The main hurdle? Closed-end funds historically trade at massive discounts to their actual underlying portfolio value. It's a drag. To fix this, Ackman sold a private stake, injecting $500 million just to confidently anchor this IPO. And to sweeten the deal, he did something unprecedented. IPO investors got free shares in the management company itself. Now, despite a huge retail push, big institutional players actually dominated 85% of this order book. So, with all that backing and a crazy good sweetener, why did this mega IPO stumble right out of the gate? On April 29th, the brand new U.S. fund shockingly plummeted over 18% from its $50 starting line. Ackman controversially blamed retail investors for this rocky debut, claiming they just flipped the stock for a quick buck. But analysts spotted a classic arbitrage effect. Ackman's older London fund offered the exact same portfolio, just way cheaper. Still, despite the drop, this new fund generates $100 million in fees, effectively lowering global costs for shareholders. Going forward, this capital targets 12 to 15 large-cap companies with super predictable, cash-generating business models. He's betting big here. We're talking massive stakes in dominant market leaders like Alphabet, Amazon, and Chipotle. They're also expanding into sovereign AI, positioning themselves perfectly to buy up assets during periods of high market stress. To stabilize the crazy post-IPO volatility, Ackman personally bought $40 million in open market shares the very next day. Ultimately, Pershing Square Inc. now stands as a robust institutional platform ready to launch completely new thematic funds. So what do you think? Will this bold strategy actually conquer the discount and forge the next Berkshire Hathaway?
An investment in knowledge pays the best interest, so why not invest in this channel? Click like and subscribe for more.